roadmap in India, if I talk about the roadmap in India, voluntary basis on 1st April 2015, mandatory basis from 1st April 2016. What does it mean? Mandatorily applicable from 1st April 2016. That means the first financial statements based on Ind AS in India were published on which date? The first Ind AS compliant financial statements in India were published on which date? Any idea?
1st April, right? Because it's voluntary.
1st April is the date of moving to Ind AS, which is the first balance sheet which was published on Ind AS. The first balance sheet on Ind AS in India. Mandatorily balance sheet. I'm talking about not about the voluntary balance sheet. The first mandatory balance sheet of Ind AS in India. Balance sheet is of a particular date of 31st March definitely. And if it is applicable from 1st April 2016, when is the
31st
first?
March 2017.
Perfect. The first balance sheet in India based on Ind AS, which was mandatorily applicable, was of 31st March 2017 is the first Ind AS financial statement balance sheet. What other balance sheets we were required to publish along with it? Now, in India, since we are moving to IFRS, we need to comply with the principles of Ind AS 1, presentation of financial statements. Ind AS 101, first time adoption of Ind AS. It required that we need to present 31st March 2016 balance sheet as comparative balance sheet. What is the date of transition in India? You need to understand the terminologies perfectly. It was applicable from financial year beginning 1st April 16.
So 1st April 2017 is transition.
The date of transition in India was 1st April 2015.
Oh.
Date of transition. Where it is coming from, I'll discuss IS 8 accounting policies. IS 8 accounting policies. Changes in accounting estimates and errors. IS 8 says that IS 8 is about deciding the accounting policy, changes in accounting policies, change in accounting policies, estimates, and as well as dealing with errors. It said that IS 8, the standard on accounting policies, changes in accounting estimates and errors, said that if there is any change in accounting policy, we'll apply the effect retrospectively. If there is any change in accounting estimate, I'll talk about what does retrospective means. If what is change in accounting estimate? If there is any change in accounting estimate, we'll apply the effect prospectively. If there is any correction of prior period error, we need to apply the effect retrospectively. This is the requirement of IS 8. And I'll tell you the reason why first time adoption of Ind AS or IFRS was required. It's all because of this standard IS 8. In the absence of IFRS 1 or in the absence of Ind AS 101, we had no choice, but we had to apply IS 8. IS 8 said that we have to apply the effect retrospectively. Retrospective means
from the past date,
as if
giving effect to the previous year.
We have been following the accounting we are following this since beginning.
Correct.
Since beginning could be since incorporation. Since beginning could be since incorporation. If the company has been in incorporation from last 50 years, they have to go back to last 50 years and recalculate the accounting as if they have been using the same accounting since beginning. There is one relaxation. Apply the retrospective effect. As far as it is practicable to do so. So there is one relaxation, that if you cannot go back till incorporation, at least go back to the point wherein you can apply the effect retrospectively as if since beginning. Suppose if you have been using FIFO method since incorporation in 2005 and we plan to change the method of inventory recording to weighted average in year 2018, will recalculate going back and bring in the cumulative effect till date and will apply the effect in the financial statements of which year. It said that if you are preparing financial statements of 31st March 2009, this is current year. It is also required that you need to present comparative financial statements, that is of 31st March 2018. That is comparative. If you wish to change the method in 2019, that you wish to prepare your 31st March balance sheet with weighted average method, you need to present comparative inventory figure with also weighted average method. And though in the year 2018, you would have been using 2018, 2017, 2016, all the way back to year 2005, you have been using FIFO. Now all these years, it says that you'll recalculate from 2005 onwards again and bringing the cumulative effect and recalculate it till which date? You'll recalculate and bring in the cumulative effect as if you have been using weighted average since beginning, and you'll bring in that cumulative effect at the beginning of the earliest period presented. You'll make the adjustment by presenting one more balance sheet of the beginning of the earliest period presented. Now normally what we present the current year financial statements, we present comparative. Which is the earliest period among them? We have presented two balance sheets. 31st March
2018.
31st March 18 is the earliest period. Beginning
Yes.
of 31st March 18. Beginning of 31st March 18 financial year.
1st April 2017.
1st April 2017 is the additional balance sheet. Is the additional balance sheet to be presented along with the balance sheet of 31st March 19 and 18. There will be one more balance sheet presented. Why? Because we have financial statements of 31st March 17 which presented inventories under FIFO method. We have balance sheet of 31st March 17 which has already been published, and they published it under the method FIFO. We already have these figures with us. What we'll do, we'll apply the effect retrospectively, cumulatively bring in the effect under weighted average. If under 31st March 17 the inventories was valued under FIFO at 4500, and it says that under weighted average the balance sheet or the inventory should be recorded under the weighted average, the inventories, the same inventories, the cumulative effect, the valuation, if you would have calculated weighted average inventories, the inventory should have been valued at 6,000. This is bringing in the cumulative effect, applying the effect retrospectively, as if we have been using weighted average since beginning. If we would have been using weighted average since beginning, the balance on 31st March 17 should have been 6,000. But we cannot go back and change the balance sheets which have already been published. Can you? You cannot go back to the year 2017 because you're already in year 2019. Can you go back and change those balance sheets? It's not possible. But what is in your control? That when you are publishing your 31st March 2019 balance sheet, you can publish one more balance sheet of the beginning of the earliest period presented, that is 1st April balance sheet, and can make the change in this 1st April balance sheet and can show inventories at 6,000. Can you do so? Can we publish one more balance sheet converting this 31st March balance sheet and publish a new balance sheet of 1st April which shows inventory valuation at 6,000? Can we do so?
Yes.
Now the same thing if it was required under Ind AS, that if you are publishing financial statement of 31st March 17, you are required to present comparative of 31st March 16. And if you need to show the changes, you had to publish one more balance sheet of 1st April 15. How you are able to do so? You'll pick up the balance sheet of 31st March 2015, which is on previous Indian GAAP. You'll convert this 31st March balance sheet, convert it into Ind AS figures, and you get the balance sheet of 1st April 2015, which is based on Ind AS. Is it possible? You pick up the figures of 31st March 15 for government regulatory requirement. This will continue to be published in Indian market on Indian GAAP. But for the purpose of moving to Ind AS, can you use the same balance sheet, convert it into Ind AS, because your date of transition in India is 1st April. Why the date of transition? Because the requirement of Ind AS is that if you are publishing 31st March balance sheet, you need to publish the comparative as well as one more additional balance sheet of the beginning of the earliest period presented. This is a requirement. One more balance sheet of the beginning of the earliest period presented. And if we need to meet this requirement, we need to publish the beginning of earliest period 31st March 16, beginning of this is 1st April 15. If we are publishing 31st March balance sheet on Ind AS, we need to publish 31st March 16 on Ind AS. And how it is possible? Only when we are able to convert this IGAP balance sheet, which was on Indian GAAP, we convert it on Ind AS. We have been successful in converting the financial statement, which is based on Ind AS, which is based on IGAP to Ind AS on 1st April. Now I have all the balances on 1st April on Ind AS. If I move into new financial year from 1st April onwards, my 31st March balance sheet will automatically be on Ind AS, and my 31st March 17 will automatically be on Ind AS. Agree or not?
Yes.
This was a requirement of IAS 8 that if there is any change in accounting policy, if there is any correction of prior period error, we'll apply the effect prospectively. Means we'll publish one more balance sheet of beginning of earliest period presented. But if we, in the absence of IFRS 1 or Ind AS 101, if we apply IAS 8, all the entities in India would have been in trouble because they had to apply the accounting policy since beginning. Is it possible? Is it practically possible? It is not practically possible. Is the reason IFRS 1 or Ind AS 101, first time adoption of IFRS or Ind AS is facilitating conversions process. They are saying that do not apply IAS 8 accounting policies, because if you apply IAS 8 accounting policies, you will have to apply the effect retrospectively, which is not practically possible. So we'll give you a way out. We'll make some mandatory exemptions mandatory exemptions to apply retrospective effect. To apply retrospective effect will give you some optional exemptions to apply retrospective effect. That if you wish to apply retrospective effect, you can do so, or if you do not wish to apply, you may not do so. Like there is an exemption. Property, plant and equipment, there is a value of 5 lakh under IGAP. I have an optional exemption that under Ind AS, I can deem it to be same value and can record property, plant and equipment at the same value, can take an optional exemption, can carry it forward in the same manner. If I have a foreign currency translation reserve, if there is a foreign currency translation reserve of 250,000 under IGAP, I have a choice to reset it to 0 under Ind AS. Is it making our life complicated or easier? If I move to Ind AS using the existing figures, will I be able to know, if I know what are the optional exemptions and what are the mandatory exemptions? If I follow those exemptions, will I be successful in converting the existing IGAP financial statement into Ind AS financial statements if I'm not required to apply retrospective effect? If I have a facility in the form of Ind AS 101 or IFRS 1, will I be able to do so?
Yeah.
So we use this standard. Is the reason this standard is only used once in the lifetime of a company or an accountant, because once they've done it, they do not need this standard.